Hi, and welcome back to my channel. Today we're going to be talking about my portfolio and why the market is slowly starting to stall. It could be a long-term issue and it may just be a short-term bump. We don't quite know. As you can see, up about $270 on the day, which is awesome. But if we zoom out to the last week, we can see that I've flatlined, even with that almost $300 gain today, up only $11 or 0.1% in the past week. Over the past month, up about 3% or $285. Over the past 3 months, up 26% or $2,200. Over the past year now, up 24.58 or 29%, and all-time up 23.85 or 28.23%. My total investment in the portfolio is now $8,450. I did input another $150 into my account last week. With that $150 investment, I purchased one more share of Penn National Gaming or Barstool Sports at $70.85. We'll talk about that later in the video, but I'm now up 10 shares. I purchased one more share of SPHD, which of course is my S&P 500 ETF. Very high dividend there, which is awesome. Average price there was 30, or rather the price on that one share was 34.03. And last but certainly not least, I purchased $50 of Bitcoin or 0.0046 Bitcoin. My new position is 0.2386. And the price there was $10,877.06. But as I mentioned earlier, a lot going on within the stock market. As I showed you, certainly it's flatlined in the past week, but let's hear why that's happening. And as always, make sure to like the video, subscribe to the channel, and comment down below what you want to see next. I'm growing every single week. And here's an article from Markets Insider titled U.S. Stocks See Third Biggest Outflow in History as Investors Flee Tech. So what is this all about? Extreme times call for extreme moves, B of A said on Friday as a detailed investment fund flows into and out of key market sectors. B of A said U.S. stocks suffered the third largest outflow of funds, with investors pulling $25.8 billion out of equities in the past week. Tech stocks have been hit the hardest, especially because they hit highs here just a couple weeks ago. September stock market correction is part of a topping process, but don't expect a big bearish move as the Federal Reserve continues to implement easy monetary policies. Here, we're going to talk about more the specifics of what that means. Investors skittish about rising COVID-19 cases and a lack of additional fiscal stimulus from Congress pulled out of U.S. stocks at the third fastest pace ever. As I mentioned earlier, investors pulled almost $26 billion out. Tech stocks, which have led the market lower since their September 2nd record high, saw $1 billion in outflows alone, representing the fastest pace of outflows since June 2019. Fund flow activity is part of a September topping process, but that doesn't mean that we think it's going to last. Here it says Bank of America's bull and bear indicator fell in recent weeks to 3.8 from 3.9, well below the greed rating often associated with the top-heavy market. Instead, Bank of America said the stock market correction is healthy rather than dangerous, which is a very interesting note here. Areas of froth like tech and the SPAC space are being unwound, which could lead the market to experience heavy trading through October and into year-end, the firm said. What it comes down to in terms of gauging whether the stock market's due for a nasty sell-off is the credit markets. As long as spreads don't widen significantly and the corporate bond exchange traded fund LQD holds 130 to 132, Wall Street's not a bear story, is what they're saying. Here they're going to talk more about that fund. They said on Friday the trend fund traded 3% above $130 level, which also coincides with the 200-day moving average. Traders will look to that level for support if the market does indeed show extended signs of weakness. Meanwhile, investors shouldn't expect a march to record highs after this correction without an additional round of stimulus. And they said with the biggest fiscal stimulus behind us and without explicit plans in the future for hard policy changes, we just don't know for the next 6 months. So basically, Bank of America is saying don't be too high, don't be too low. We just don't know what's going to happen. Now we'll get into my portfolio. First stock that we'll talk about today is Vivint Solar. Of course, I talk about it nearly every week now. Total return is now plus 1482 or almost 440%, which is terrific. That continues to go up. As I mentioned before, the price is high enough now. I'm not sure that it's worth buying. And at the same time, I think there's still some room to grow. So I think I'm going to sit here for now. And before that merger with Sunrun, I will probably end up selling. That will be down towards the end of the year. So over the past month, up 30%, 3 months up 287, over the past year up 390, and 5 years up 183%. Let me know what you think about Vivint Solar down there in the comments. Next up, we have Microsoft, which of course, as that article mentioned, has been hit extremely hard since really September 2nd, since those highs. Total return is still up $108 or 15%. Like the decent dividend here, only makes up about 7.5% of my portfolio. We can see it's up on the day. Over the past week, it is up, but over the past month now, down about 5%. And since that high of 232, it is down about $25. So the past 3 months, up 5%. Over the past year, up 51. And 5 years, we are looking at 377% growth. Very good growth here. Very good company, very good earnings. I really like Microsoft, and I will continue to try to purchase shares of Microsoft. And as I mentioned earlier, I did purchase one more share of Penn National Gaming. That brings my total to 10 shares. Total return is now $399, which is about 134%. I mentioned a few videos ago an article where they talked about the potential for Penn National Gaming and the sports gambling market. That company said that we could be looking at a price upwards of $300 if everything pans out and really goes the way that they want it to. We don't know if that's going to happen, but again, I'm very confident that this sort of fledgling industry really is going to continue to explode, and that this is a good stock to be invested in, even though the price is way up. So up 9% on the day. Over the past month, up 25%. 3 months up 118. Over the past year, up 267. And 5 years now, up 293%. Let me know what you think about either Barstool or Penn National Gaming. I find this to be probably the most intriguing stock in my entire portfolio. And I always like to talk about Walmart because of how consistent they've been and how good their growth, I believe, is going to continue to be in the future. Total return's only up about $31 or 12.5%. But of course, the reason I like Walmart, decent dividend, extremely consistent. If you go back to even the 2008, 2009 stock market crisis, Walmart was not hit extremely hard because people need cheaper alternative goods when things are not going well. So over the past day, up about 0.5%. Over the past month, up 6%. 3 months, looking at 14%. Over the past year, up 16%. And 5 years, look how consistent that growth is, up 116%. And no matter how high these peaks are and how low these valleys are, they are on the continued road to success. Verit is a position I have not talked about in a very long time. It's a very interesting one because it's probably the worst purchase that I've made, but at the same time, I think now could be a decent time to continue buying. So total return here is down $45.40, or about 25.5%. We zoom out to the month, we can see they're down a little bit. The bigger problem is 3 months. When we zoom out, we see 4% even after that growth, and the year is where it gets really ugly. Peaked here in February at $10 and is down to $6. I believe the all-time low here was about $4. That's correct, $3.98. Big problem is real estate was hit harder than just about anything else when the pandemic hit, and this is a company that's had sort of troubling issues in the past. So down 35% on the year, and over the past 5 years, down 23%. The real reason that I'm frustrated with this is the dividend was cut. So we can see in April, I was paying 0.1375 per share, and that was cut in half to 0.077 per share. That being said, the price has dropped so much, the dividend yield is still sitting around, and that's high. It's about 5% actually from the research that I've done. So definitely a stock that I'm going to look at continuing to purchase because of A, the low price, and B, the potential to get back to where it was, even if that dividend isn't super strong. Let me know what you think about this one. And the last thing I talk about in every single video is Bitcoin, the largest holding in my portfolio and something that I'm going to be holding for at least the next year. Total return is only up about $258 right now, or 11.25%, makes up 23.5% of my portfolio. And as I mentioned at the beginning of the video, my quantity is now 0.2386 Bitcoin. Average cost is up to 96.18. That of course is inching up every single week. And my total cost of purchasing is up to $22.95, which is crazy to see. Over the past week, down about 2%. Over the past month, down 5.5%. 3 months, up 15%. Over the past year, up 25%, and at the 5-year clip, up 4,630%. Now, I continued to say it. I'm going to buy Bitcoin. I'm going to buy Bitcoin. I'm going to buy Bitcoin. Let me know what you think about that, or if you'd like to hear me talk about some other cryptocurrencies. I'm open to talking about any of those. And I'll be back with a new video next week. Thanks for watching.